Hey guys, welcome back. Today we're diving deep into AMC's latest moves and why they matter, not just for the company, but for the broader market, retail investors, and short sellers who have been under extreme pressure. Recently, AMC CEO Adam Aron made headlines by announcing a significant new strategy aimed at boosting attendance. Starting July 9th, AMC is offering 50% admission ticket discounts every Wednesday exclusively for AMC Stubs members. Joining Stubs is free, instantaneous, and easy, so this isn't just a minor promotion, it's a calculated effort to get more moviegoers in the doors, increase concession sales, and ultimately strengthen the company's fundamentals. At first glance, this is simply a strategy to drive attendance, but when we look deeper, there's more to unpack. By cutting ticket prices in half, AMC is indeed sacrificing a portion of direct revenue from admissions, but the logic behind this is straightforward. More people in the theater means more spending on concessions, snacks, drinks, and merchandise, all of which maintain full pricing. In other words, the company is sacrificing short-term profit on tickets to capture a larger long-term gain from overall revenue streams. This strategy not only encourages spending within the theaters, but also builds loyalty among moviegoers. It's a method that's been proven effective across industries. Give the consumer an incentive to participate, and ancillary revenue naturally follows. AMC has executed similar strategies in the past, and this move is simply the latest example of management leveraging clever incentives to strengthen fundamentals and increase market share. Looking even deeper, there's a strategic narrative in Adam Aron's messaging. He repeatedly emphasizes leadership, saying, "To be a leader, you need to lead." This is more than corporate speak. It's a signal, intentional or not, to investors and the market. AMC and GME are two of the most manipulated stocks in the market, facing unprecedented pressure from short sellers. Adam Aron's comments may hint at the company taking a proactive stance against these manipulations, particularly in the context of upcoming naked short-selling lawsuits. If AMC is positioned to lead, it could mean that management is not only focused on improving fundamentals, but is also aware of and prepared for the legal and market dynamics that could drastically impact the stock. By emphasizing leadership, Adam Aron may be signaling to the market that AMC is ready to act decisively in its own interests and potentially in the interests of retail investors who have supported the company for years. This leadership strategy also connects with the company's options market activity. This week marks one of the biggest options weeks of the year for AMC, with max pain set at $3 and the stock closing at $3.01, just above that level. Max pain, while not a guarantee of breakout movement, serves as a barometer for short seller activity. Closing above max pain suggests that shorts are failing to push the stock down to their desired levels, highlighting a weakness in the liquidity that these institutions can access to suppress AMC. This is significant because the overarching goal in this long-term battle is to exhaust the capital of short sellers. Each time AMC resists downward pressure, it strengthens retail investors' position and puts additional strain on institutions. The stock's resilience near max pain demonstrates that short sellers are increasingly pressured and that retail activity is beginning to dictate the market's rhythm. Even small fluctuations, like the 23% move seen after a recent release of pressure, appear minor for AMC due to the stock being far from its true price discovery level. This illustrates a critical point. Even when the market allows limited upward movement, AMC is positioned to capitalize on it. Retail investors who have retained shares instead of selling continue to exert pressure, highlighting the ongoing influence of the retail base. When you combine this with the fundamental improvements, including AMC's cash flow positive operations, the company is not just surviving, it's positioning itself strategically for sustained growth and influence. Every tactical move, from price adjustments to operational decisions, is designed to fortify AMC's standing while exposing weaknesses in the short-selling system. The company's operational strategy also dovetails with broader market dynamics. By offering 50% ticket discounts, AMC isn't just driving attendance, it's building a loyal customer base that generates repeat revenue. These tactics reinforce AMC's stability and long-term profitability, which in turn has implications for the stock market.
Institutional investors and short sellers are closely watching every move. When a company like AMC executes a plan that improves fundamentals while maintaining retail loyalty, it places added pressure on shorts who must continually hedge or cover positions to maintain control over the stock. Each new strategy, each small operational improvement compounds the difficulty for institutions attempting to suppress AMC. Beyond operational strategy and options market positioning, AMC's narrative of leadership and market influence cannot be understated. Adam Aron's messaging sets the stage for potential revelations in naked short-selling lawsuits. AMC and GME are the most heavily targeted companies when it comes to short selling, and if leadership at AMC is indeed preparing to act or has information with significant market impact, the effects could be substantial. The stock market reacts not just to numbers, but to perception and information. By signaling leadership and readiness to act, AMC is effectively preparing both the market and retail investors for potential moves that could reshape the dynamics between retail holders, institutional players, and short sellers. In summary, AMC's 50% Wednesday ticket discount isn't merely a marketing tactic, it's a multi-layered strategy that improves attendance, drives revenue beyond ticket sales, strengthens investor confidence, and signals market awareness and preparedness. Max pain levels in options market activity suggest that short sellers are increasingly stressed, while retail investors maintain control of the float and continue to support the company's fundamentals. Adam Aron's leadership narrative underscores a proactive stance against market manipulation, potentially setting the stage for significant developments in naked short-selling lawsuits. Each element, from operations to messaging to options activity, interweaves to create a strong, resilient position for AMC, showing that the company is both improving fundamentally and strategically positioning itself for the long-term battle with short sellers.
Now that we've covered AMC's operational strategy and how the company is strengthening its fundamentals, let's turn to one of the most critical developments in the market today, the naked short-selling lawsuits and why they matter, not just for AMC, but for the entire financial ecosystem. While we can't know for certain what piece of information Adam Aron may be holding, it's reasonable to infer that it could relate to these legal and market activities. Naked short selling has been a persistent issue for AMC and GME, with significant manipulation taking place behind the scenes. Institutional investors, including major hedge funds, have repeatedly created synthetic shares, flooding the market with stock that doesn't actually exist. This is why AMC and GME have experienced volatility that far exceeds what normal supply and demand would suggest. Now, with lawsuits emerging and firms like Genius Group stepping forward, the cracks in the system are beginning to show. Currently, two major brokerage firms, Robinhood and Fidelity, are at the center of allegations tied to illegal naked short selling. Robinhood, of course, is infamous for having restricted the buy buttons for AMC and GME during critical moments, directly impacting retail investors' ability to participate. Fidelity, on the other hand, has been implicated in routing buy orders into dark pools. Essentially, when retail investors place buy orders through Fidelity, those orders sometimes never make it to the public market, which suppresses the stock price and protects short sellers. This manipulation ensures that even when retail investors attempt to push the price higher, the effects are muted and true price discovery is delayed. Genius Group is now preparing to file a naked short-selling lawsuit against these practices, and the market is reacting immediately. We can already see the impact. Genius Group's stock jumped 45% following news of the impending lawsuit, while Quantum, another smaller company involved, rose about 13.45%. These are not huge market caps. Genius Group sits at $46 million and Quantum at just under $100 million. But the price movements indicate the pressure that legal action places on short sellers. If these smaller firms can experience dramatic moves due to litigation, it's easy to imagine the effects that could occur when AMC, with its significantly larger float and market capitalization, becomes involved in similar legal or enforcement actions. Retail investors have long suspected that manipulation was occurring, and these lawsuits are finally putting those suspicions into the light. This is where Adam Aron's statements about leadership gain additional weight.
If he possesses material non-public information, or MNPI, regarding naked short selling or related litigation,